Hey, this is June from Turning Point Life Investment, and this is your market analysis for November 14th, 2009. Looking at SPY daily chart, you can say that the market is basically on the fence right now. It's sitting right underneath the previous high. It didn't exactly close above it, so resistance is still there around the 11 or 110 level. So from a bullish perspective, just looking at the price action, you can see that the last couple of days this week has more or less been in consolidation form. So if that is the case, then that means the market is simply taking a break from this huge run up and just simply pulling back and getting ready to launch itself above this previous high. Now, from a bearish perspective, since it's sitting right underneath the resistance, we possibly have a double top formation going on right now. Okay, and that's why I say it's pretty much it can go either way. It's either a double top formation or it's basically consolidating for getting ready for a new high. Now, going into an hourly view, let's take a look at the support and resistance. The 60-minute view tells us that it's holding up well with the 109 support, so that's pretty much your immediate support level. If it gets broken under, I would expect at least this gap right here. There's a pretty significant gap right between, I'm just going to say 107 and 108, that could probably get some retesting if there's more selling going on. If the market trades underneath 107, then it might be a little more bearish than that we could expect for the market if it manages to trade and close this gap right here. So one thing I would look for, at least a bullish sign, is a breakout above this short-term trend line, or at least this downward trend line. If it's able to do so, if it's able to propel itself above here, then that would be somewhat of a bullish indication that the market wants to go higher and possibly and most likely make higher highs. If not, a breakdown, as I mentioned, of the moving average and a close of this gap could most likely be tested if there's more selling going on. Okay, next we go into the VIX. Now I want to show you something that's really interesting about the VIX. The VIX is actually showing some kind of divergence. We notice the market. Okay, let me go back to the market. The market is pretty much at its previous high right here. So if the VIX were to correlate accordingly, that means the VIX should be at the previous low around the 20. But it's not. It's actually higher than its previous low, so it's created a higher high. That means there's still some kind of fear that's still lingering within the market, even though price wise we are where we were last month, but the fear wise it's not as, or fear wise it's actually higher than we were before. So if that is any indication, that would be a bearish indication for a sentiment wise. And also you can see we have potentially an inverse head and shoulders in the making. Okay, so we just need to see some bullish follow through with the VIX to really say that this is a inverse head and shoulder for the VIX. So I would definitely look for that for the VIX. However, any breakdown lower would completely disregard or nullify this pattern right here. But you can see we put in a pretty decent doji right here, and I would expect some more follow through to continue with the VIX.